Hey everyone, how's it going? Welcome back to today's video on news events. I want to talk about, does news event actually affect the overall price action analysis? I get asked about this question quite often, and I want to dig into the recent event, the recent FOMC volatility that happened in the market, and then how that did not change the overall condition, did not change the overall market that we were looking at. We were still looking at this as the dollar getting strength, and that's why, in my opinion, I'm going to talk about why the news event is not going to affect the price action analysis that we do. So I'm going to do a few examples of what I saw in the recent time on a few pairs and how that news event has affected the overall price condition. So starting with Kiwi dollar, we talk about that we are looking at this as the bearish move. We had an impulse, correction, impulse out. And all this price action here is just a continuation correction, continuation consolidation. And just because the news happened, and this is happening in that same time, and it will affect all the other pairs in that short period of time. But guess what happened is that after a bullish push up, price stayed a little bit of consolidation here, trapping a lot of traders here to look for a buy and ends up reversing the price, tagging a lot of impatient newcomer traders out, and pretty much is forming continuation. And now we're looking to see price is likely to continue lower and lower. It pretty much fits our initial analysis of this ascending channel, impulse out followed by a continuation correction here, and looks like we're going to continue the price. So same thing has happened throughout all the other similar dollar pairs and yen pairs, and I want to dig into a little bit deeper just to show everyone that the news will temporarily create a volatility in the market, which is what it always do, but it does not predict and it does not give you the outcome of our price action analysis. Because when we look at the higher time frame, we talk about that price has been in this higher time frame kind of rising wedge, and we finally have this strong bearish reversal impulse. Strong bearish impulse, correction, and impulse out of that higher time frame correction. So this is all giving us very good confluence that we're likely to just continue downwards more after this strong push. And what we see on the lower time frame, what we see on the 5-50-minute chart when we have this news event, it simply just push the price up. And again, what it does is stay in the Asia session, consolidating a lot of buyers in getting into the trade in this area, but ends up just impulsively break down lower and lower and lower. And that's pretty much happened across the board. And I want to make this example pretty much showing us, the news event, of course, creates volatility, but you shouldn't be using it to, trying to get in on some entries because you see some bullish candle. You naturally think this is supposed to take off now, but you forget to see what's going on the higher time frame and what's going on the lower time frame to give you that overall market condition. We talk about that head and shoulder pattern is very clearly on the higher time frame. We talk about the impulse, all of that rising wedge and deep continuation correction flag channel, and looking for the price to break down lower. So let's talk about a few more examples here. Pound dollar here, still looking at this as a potential sell opportunity to break out. And if we notice, again, during the FOMC meeting, we have that surge to the upside and pretty much just make the price form a double top here. And we impulse down, correction, impulse down again. Looks like there's another correction. And I'm ready to wait for this to break out of this higher time frame structure and continue all the way to the next low. And that's why my bias, my analysis on the dollar pairs are still bullish based on what I see on in terms of price action. So a few more example on the dollar pairs. This is even a better one on dollar CAD. Dollar CAD starting here. This was the news from FOMC. We pushed the price down lower, and guess what happens? We pretty much form an expanding structure. We talk about expanding structure can be both reversal and continuation, but this time because we're in the higher time frame descending channel and price makes the push down and form a expanding structure, to me it's very likely we're going to see that reversal from the bottom of that descending channel, and price pretty much on the lower time frame had this impulse down and a strong reversal impulse up. It looks like we're trying to form some sort of structure here to continue the upside move, which is what we originally talked about from here, looking for that bullish reversal. So what we see on the lower time frame, all this little the news event, a little bit of volatility, it doesn't change where the market is going to go. So looking at it, let's look at a few yen pairs because a few yen pairs is exactly identical. If we look at yen pairs, we're talking about how we had that bearish move down and then a period of long consolidation. But pretty much what price ended up doing is you notice that we had an impulse followed by a correction, and this was the FOMC meeting. We popped to the upside, breaking previous high, and guess what happened? Price pretty much forms a reversal structure at the top of this ascending channel, double top here, and then pretty much had that first impulse right down into the pattern, and this is where I entered my sell entry here and pretty much bank about 3.5% or so. And we're still looking to see what price will do. You see the strong push to the downside. Naturally, I was waiting for a bigger correction to form and looking to get back into the market. But love when I see a bullish push up followed by a reversal impulse and look like we're going to form a continuation correction here to continue the price. But this all started from that news event. You can see that the news event popped to the upside, trapping a lot of buyers here. Certainly, they're just going to naturally think this is going to take off now. But again, they're not looking at the higher time frame. The higher time frame, we're at a potential double top. That's where the initial price that had that bearish move down, and we're pretty much in the higher time frame ascending channel, pushing the price up, and that reason double top, smaller lower time frame ascending channel, and a reversal impulse move. So all that is going to add confluence for us when we look for price action analysis. This is why we don't get phased from the news event, from any other volatility, because we're going to stick to our plan, our strategy, our risk management, and our execution. Moving on to a few other yen pairs that has happened during the news event. When we zoom out a little bit here, FOMC meeting right here when price pushes the upside, push the price up, but what it does is still staying in this ascending channel and a reason double top and price, surely enough, it reverse impulse out of this ascending channel. Again, from a higher time frame perspective, we just have to see that we've been moving up in this rising wedge, and this latest bit of the price is very corrective. Even though this popped to the upside, but doesn't change the fact that we're in this ascending channel correction. We're in this consolidation pushing the price up, and this latest bit of the price again is just a volatility pushing the price up, but it pretty much just reverse impulse down and looks like we're going to have a continuation correction here, and price is likely to continue lower. Going on to pound yen, same idea here, right? When we zoom out a little bit here, when we look for the FOMC meeting here, price popped to the upside and then continue popping to the upside, but we're still in this ascending channel correction. We know the news creates volatility. It pushes the price up to a double top here and forming an M style pattern as I talk about a very strong reversal. And if we look into the lower time frame, it gives you a little bit better clue. After the FOMC push out, but what it actually happens is it forms a head and shoulder pattern, a smaller M pattern, a small double top, and price impulsively break out. And I look for a continuation correction. We push the price down lower. And once we break the low, I see that there is a potential bullish opportunity here, and I exit the trade for profit, but still keeping in mind that we can still go down further and further. And I'm still looking for price action. I'm still looking for that bearish continuation correction here to push the price lower and see what price will do once we break this low. And last one, Kiwi Yen here. So news event, FOMC meeting, push the price up. What it ends up doing, well, forming an ascending channel, smaller ascending channel within this kind of larger lower time frame ascending channel. But ultimately, if we zoom out here on the higher time frame, there's a clear double top now. What we're seeing, the lower time frame had a false breakout, impulse, and then forming this expanding structure, and eventually the news event pretty much triggers a strong bearish reversal. It pushes the price up, forming another double top here, and then reverse back down. And it looks like there is a continuation structure here, and pretty much just waiting for price to break out here and continue lower. So That's a few examples here that has been affected by the news for temporarily, and pretty much all of them resume the price, right? Same as Euro Aussie here, we have this bearish move from the news event. But if we zoom out here, overall condition, we're still in this descending channel on a higher time frame, even though the news event pushed the price down, but it pretty much recovered right away. And our overall higher time frame vision is still looking for that bullish run to the upside, still looking for a breakout, and still looking for a continuation. Euro Kiwi, same idea here, and it actually triggers this move again. During the FOMC meeting, price pushed the price down all the way down, and then pretty much could not break any lower. Instead, we formed a larger continuation correction for the overall move from the bottom here. So we have an impulse up, larger correction, and then if we look closely on the lower time frame, we reverse impulse up, and then continuation correction here form. And look at that massive breakout. And this is what I've always been calling out for. I've been waiting for this bullish move, waiting for this descending channel to complete, and pretty much waiting for that strong breakout to the upside. And as always, waiting for that continuation correction to push the price higher. So what do we take from all of this? What do we take from news events, giving you all these examples? I think these are enough example to show that the news event doesn't create direction. It certainly creates volatility. Don't get me wrong. There's certainly volatility in there, and maybe there's people making money here, short term wise, scalping wise. So nothing wrong with that. But my whole point here is to not to pretty much identify that it creates volatility, but it doesn't create the direction of the trend. It doesn't change the fact that the price action clearly showing you that this is a reversal structure, and we're likely to have an impulse correction. We're going to impulse out of this descending channel on the higher time frame. So we may temporarily get the short-term move, but it doesn't change the overall market condition, and that's kind of what I'm trying to explain here. Often, in my opinion, a lot of beginner traders, a lot of newcomers will jump onto these trades hoping that this is going to be taking off and they're going to make massive profit. But someone who's been experienced enough in the market have seen this over and over again, and I can really assure to tell you guys that that's how the market trap a lot of impatient traders, and then they almost always going to take a loss here, or just if you're lucky, you're going to take a break even. But most of the time, when they see a volatility jump down like this, they're trying to jump on here to sell, and price pulls back, and they're going to take a full loss. And if they don't have stop loss management, they don't have good risk management, the price continue to move up, and they're just going to be in such a drawn out, such a huge loss. And that's why the market punish, in my opinion, traders who haven't put in the time, who haven't put in the work to analyze the market, do backtesting on the market, and control their mindset and emotion. Okay, we last thing I want to touch base on is we cannot control the outcome of the news. That's not something we can control. If this news event is going to take off, if this news event is going to go down, we don't know what's going to happen. But what we do know from the market is that we can control our trading strategy and style. We can control our stop loss. We can control our entries. We can control our take profit, etc. And most importantly, we can control our risk management. We don't need to risk unnecessary trades. We only cap our trade at a minimum so that we can have capital to trade when the other opportunities come up, and control our mindset and emotion. Trading is not a get rich quick thing, right? When people see that, naturally they're going to jump on here, kind of like a bandwagon. But what it does is the market punish the traders who do that. Okay, so this is my take on why I personally don't think news event will affect the overall price condition, price action analysis in the market. Welcome any kind of question, feedback, or comments on what I just mentioned here, and hope to talk to you guys next time in tomorrow's my New York session market update. All right, thank you very much, guys.